Good morning. This is David Bennett, and this is Bitcoin And, a podcast where I try to find the edge effect between the worlds of Bitcoin, gaming, permaculture, podcasting, and education to gain a better understanding of all. Edge effect is a concept from ecology describing a greater diversity of life where the edges of two systems overlap. While species from either system can be found at the edge, it is important to note there are species in the overlap that exist in neither system, and that is what I seek to uncover. So join me in discovering the variety of things being created as Bitcoin rubs up against other systems. It is 8:32 a.m. Pacific Daylight Time. It is the 9th day of August 2024. This is episode 933 of Bitcoin, and I am back from the mountains in Colorado, much to my chagrin, much to my wife's chagrin, and much to my children's chagrin. Yeah, when you're in that kind of beauty, you just don't want to come home. And it's not just about the beauty. You know, we were hanging out for the entire 2.5 weeks that we were up there with my sister, so we were all having family meals together, and that right there, I mean, I could probably do that in some kind of rundown ass house inside of a junkyard, and it would still be a kind of a special thing, because there's just nothing like family. If you think that there is, there's not. That's the only real wealth that we have is ourselves, our health, each other's health, and to be in close proximity together. After that, everything else is just kind of a distraction, honestly, and we have many distractions. After episode 932, that's when the bottom fell out of the market, and the guys over in Japan decided to, essentially, they didn't really do anything. The market itself just kind of said, look, that raise that you did of 25 basis points at the Central Bank of Japan, yeah, that we just can't do that. But what I found odd was that it took a while for that signal to propagate through the market, and on all of a sudden everybody going, I'm out. I can't. We just can't. Like a lot of banks were sitting there going, we're holding these bonds. You've done it again. This time it's Japanese bonds, and you've raised your basis points, and now the face value of the bonds that we're using to back as collateral our bank and put it on our books has now lost so much value that we've got to do something. And the next thing you know, ripple effects just blasted out through everything. And Bitcoin was the first to get hit because Bitcoin is the most liquid market, and it trades 24/7, 365. So the signal was there with Bitcoin before anybody had a chance to even blink. The signal was being flashed by the Bitcoin market because all the other legacy markets were actually closed. And after that, I was going to do, I promise, I was going to do a show that day and on Tuesday, but we were leaving on Wednesday. House has to be cleaned. It's the last days that we're going to be up there, so that's why I said, you know what, I'm just gonna lay off. There's nothing I can say about what's going on that's going to make anybody feel any better at all. It probably would have been a show with like 15% of the listeners as usual, because everybody freaked out. And this, it wasn't that this time it's different. This time it's not different. This time it's the exact same as all the other things. If anybody says, this time it's different, the only way that it could be really different is probably because we're all exhausted. Everybody's exhausted. I've heard more talk about burnout over the last couple of weeks than I have in quite a while. But what do you expect? We've been at this, since 2009. People are going to fall away. People are going to fall away like Mutiny Wallet. That was a real surprise to me. The quote, our company is exploring alternative products. We'll be shutting down the wallet at the end of the year, but you can still self-host. And thank God they're allowing that. I mean, I think that there's a real opportunity for these projects that started out open source to just go ahead and say, look, we're not going to do it anymore, but hey, here's all the code, you knock yourself out. And I think what we'll see in the future is a lot of resurrections. I really do. Not zombies, just resurrections of projects where the original founders, the original people that did the coding, just they've gone away, but the project itself gets picked back up in some form, fashion, or another. And that's what I think we're going to start seeing. We're going to start seeing a sort of a second layer of some of these projects that we thought were dead or that we're very sad to see go away. Like, I'm very sad to see Mutiny Wallet go away. I'm very sad of the underpinnings of why they're going away. It seems that one of the developers of Mutiny Wallet is going to go work with that idiot Udi, and I'm going to call him an idiot. I'm sorry. I just don't think that there's anything right about what Udi is doing with Taproot Wizards and all the rest of that stuff, and it's a real shame. It is a real shame that we still live in a world where you have to have so much cash to feel anywhere close to comfortable that you will do something like trade in, a fair set of ethics, because what Taproot Wizards is doing is not ethical, and I think everybody knows it, including Udi himself. And I'm pretty sure the developer from Mutiny that is going over there also understands that what is going on is unethical, but maybe the developer's at the end of the rope. I don't know. This time we're going to find that this particular time is very delicate. It's not that anything's going to break. It's just that reactions are running really high. So something happens and all of a sudden the reaction just is so overwrought that, because that's what I think that this is. I think that this developer going over to Taproot Wizards is an overwrought reaction to the pressures that we find going on in the outside world, whether you're in crypto, whether you're in Bitcoin, no matter where you are. The weak men seem to have taken the wheel. Fuck the bears. The bears, we don't give a shit about the bears anymore. It's the weak men that are behind the bears, and they seem to have said, you know what, bear, get out of the way. You're not steaming to disaster fast enough. Thank God for Bitcoin. Otherwise, I and very many other people would have lost hope a long, long time ago. Maybe even Putin would have lost hope, but apparently not, because he has signed a law legalizing cryptocurrency mining in Russia. Bitcoin magazine Nick Hoffman, Russian President Vladimir Putin has officially signed a law that legalizes cryptocurrency mining in Russia. According to a report by Russian news agency TASS, the law introduces several key concepts, including digital currency mining, mining pools, and mining infrastructure operators. Mining activities are now recognized by Russia as part of turnover rather than the issuance of digital currency. The new legislation specifies that only Russian legal entities and individual entrepreneurs registered with the government will be allowed to engage in cryptocurrency mining. However, individual miners can participate without registration, provided their energy consumption remains within government-set limits. Yeah, that's gatekeeping right there. Additionally, the law permits the trading of foreign digital financial assets on Russian blockchain platforms. However, the Bank of Russia retains the authority to ban the placement of certain assets if they are deemed a threat to the country's financial stability. According to TASS, T-A-S-S, during a recent government meeting, President Putin emphasized Russia needed to seize the moment, that's in quotes, in establishing a legal framework for digital currencies, and he highlighted the potential of digital currencies to contribute to Russia's economic development, stressing the need for proper regulation and infrastructure. The law is set to take effect 10 days after its official publication, except for specific provisions that may have different implementation dates. And all I see right here is the exact same weak-handed fiat mindset that has gotten us into the situation that Bitcoin needed to be developed in the first place. And what I mean by that is this: laws and regulations, and you've got to be registered and all this. And yes, you can still mine because, out of the goodness of our hearts, we're going to allow you to mine, but your energy consumption must come in at a certain limit. This is nothing but regulatory moat making. Only the chosen ones will be able to actually do the thing in Russia, which is no different than what we already have. It's just that they're just looking at mining as a different form of money. That's really what this boils down to. These people, these weak-minded individuals cannot wrap their minds around the fact that they are losing control of everything, because everything is based out of money. We've done that part to ourselves as far as humanity is concerned over the last, since the agricultural revolution about 12,000, 11,000 years ago, when we started staying in one place and building cities, and we were no longer traipsing around with tribes. That's when we really started developing systems of money. And those systems of money became corrupt very, very quickly. And everything that money touches, which is everything, also got imbued with that corruption. So now here we are, all the way, thousands and thousands of years later, we have this new chance of salvation upon the horizon. And what do these people do? They're thinking the exact same way that people 10,000 years ago started thinking. How can I control it? I think they're actually thinking of how they can control it first, and how can I benefit from it second. Whereas if they just switched the roles, if they just said, how can I benefit from this, instead of how can I control it, then they would actually benefit from it more, because once they start controlling it, they'll lose the benefit. I really believe that that's the way this shit works. We're not thinking about how it can benefit us. We're thinking about how can we control it. All the way down to the individual, the pleb on the street, we think about control and not benefit. So we'll have to see how Putin, goes on with this. But honestly, we think that the news that, them saying cryptocurrency mining in Russia is now legal is good. I think it literally means nothing. I mean, I don't think it's bad either. I just don't think that it means what we think it means. Maybe we'll get something here out of Savannah Fortis writing from Cointelegraph. U.S. policy group proposes a Bitcoin tax-free zone for digital economic growth. Oh, well, this sounds good. Let's get into it. A new proposal is underway in the United States which aims to establish the country as a global leader in the digital economy through the creation of a Bitcoin tax-free digital economic zone, also being called the DEZ. The initiative, spearheaded by the newly formed USA BTC Policy Group, now keep that shit in mind, advocates for the tax-free DEZ where Bitcoin can be traded and accumulated without capital gains tax, but with a tax on redemption. According to USA BTC, the initiative could secure the U.S.'s financial future by fostering a resilient and innovative economic environment, leveraging the potential of Bitcoin while maintaining the central role of the dollar. Bitcoin has already challenged policymakers around the world to rethink traditional financial strategies. The USA BTC proposal argues that an outright government purchase of Bitcoin would be both unfeasible and politically untenable. Oh, here we go. Therefore, it advocates for the creation of a DEZ, where Bitcoin transactions can be carried out tax-free while incorporating a taxed redemption process to ensure revenue generation. The initiative says offering tax-free capital gains within this zone could attract investors and foster wealth growth within a regulated environment. USA BTC goes on to say that the exit tax on Bitcoin conversions back to traditional currency could provide a new revenue stream for the government, which could benefit both the federal and state treasuries. As part of the plan, here we go, USA BTC envisions the creation of a, wait for it, pegged Bitcoin system on a layer 2 solution that would ensure efficient and secure transactions. You know what that's reading as for me right now? Shitcoin. A not actual Bitcoin. Something else. A coin that represents a relationship. That's sort of how I'm reading it, although it doesn't actually say it directly. Let's continue. The proposal also outlines a phased approach on how such a DEZ would be implemented in the U.S., starting with the president issuing an executive directive to authorize the use of the Exchange Stabilization Fund, a tool within the U.S. Treasury originally established by the Gold Reserve Act of 1934. Subsequent phases would involve drafting legal opinions, legislative efforts, and extensive public outreach to ensure broad understanding and support. The Internal Revenue Service would also play a collaborative role in the establishment of a robust legal framework and approving the proposed tax framework. USA BTC says that if it's successful, the implications of this initiative could be a major push towards the U.S.'s position as a leader in a digital economy. It also explicitly protects against government overreach, a continual concern for many of the cryptocurrency community, by enshrining the right to self-custody into law. As currently outlined, the implementation phases of USA BTC's plans are slated to begin in 2025. If all legislative and regulatory approvals are secured, the DEZ could be fully operational by 2026. Okay, again, it's this one sentence that I want everybody to listen to. As part of the plan, USA BTC envisions the creation of a pegged Bitcoin system. Say that again. A pegged Bitcoin system on a layer 2 solution that would ensure efficient and secure transactions. Well, Billy Boy, we already have that shit. We already have it. What are you planning on building? What creation of what are you talking about? A pegged Bitcoin system on a layer 2 solution sounds exactly like I said before. A new coin, which if it's not Bitcoin, it's shitcoin. And I don't care if this particular token is a pegged token to Bitcoin. I don't care that it's on a layer 2 solution on the Bitcoin system. This sounds to me very much like a shitcoin, and it's wrapped in what everybody wants to hear. Tax-free, a tax-free capital gains, a zone of tax-free, and oh my God, revenue generation. All right, so that I see two major problems. I just told you one. The other one was, let's see, hold on, where was it? Let's see, where was it? Oh, here it is. This other sentence. The USA BTC proposal argues that an outright government purchase of Bitcoin would be both unfeasible and politically untenable. Why? I don't think either one of those are true. I don't think it's unfeasible, and I don't think it's politically untenable. So why? USA BTC at this point, to me, seems to be a Trojan horse. It seems to be polluting the possibility in the minds of people that read this, or the minds of the people that go to their talks, or the minds of the people that want to figure out what the hell USA BTC is doing, that, oh, well, it's just unfeasible for a government to purchase it, and it's politically untenable, so therefore, here's our solution. As part of the plan, we envision the creation of a pegged Bitcoin system on a layer 2 solution that would ensure. Do you see how this runs? Do you see the pattern? It's a pattern of control. It's a pattern of propaganda to pollute the possibilities of positivity and drive the person to buy a shitcoin. Right now, USA BTC is not in the camp of people that I trust. Okay, so you can make your own decisions, but understand, I don't think they're above board. Let's move on. OKX cracks down on Tornado Cash users with account terminations. Oh boy. Cointelegraph, who's this one? Amaka Nawa. I'm going to really try. Amaka Nwokocho. There's no way. I'm never going to pronounce that name correctly. That's on me. I'm sorry. I don't mean to make fun of her name, but dude, I can't pronounce it. In an announcement aimed at reinforcing financial integrity and improving compliance measures with international sanctions, OKX CEO Star Zhu declared that any accounts on the exchange found to be interacting with Tornado Cash would be terminated. The announcement comes in response to escalating concerns about Tornado Cash, a decentralized mixing service that enables users to obfuscate the origin and destination of their cryptocurrency transactions. While Tornado Cash is popular among privacy-conscious users, malicious actors tend to launder stolen funds. Zoo emphasized that if users deposit money from sanctioned entities such as Garantex and Tornado Cash into OKX accounts, or attempt to withdraw funds from OKX to these entities, the exchange's risk control mechanisms will be triggered, resulting in account closures. Quote, "We are required to comply with applicable sanctions policies, including U.S. sanctions," Zoo stated. The warning was issued following a public call from a user named Satoshi Friends, who urged his community and users from the Commonwealth of Independent States countries to urgently withdraw all funds from OKX and cease using the exchange indefinitely. He cited the exchange's stringent policies and personal experiences, claiming that users risk facing sudden account blocks, fund freezes, and asset losses. Satoshi Friends mentioned that several influencers have had their accounts blocked and funds limited, with partial resolution only occurring after direct intervention with the OKX team. In response, Zoo acknowledged that the user's accounts had multiple significant transactions related to sanctioned exchanges or DeFi protocols. Zoo noted that the user had been allowed to withdraw his clean funds before blocking his account. However, OKX refused to transfer the user's data from an old account to a new one, citing that it would violate their company's compliance policy and be a potential workaround. Dude, whatever. Zoo reiterated the importance of compliance. Yes, let's comply. We must be compliant, noting that OKX does not onboard any customers on the specially designated nationals list and cannot offer services to sanctioned persons or entities. He reassured the majority of users that they are unlikely to be affected by these measures because they are far from those sanctioned programs and will never conduct transactions related to a sanctioned person. Tornado Cash has recently been used to launder stolen funds, yada, yada, yada. We know. So yet another exchange is folding up like a cheap suit and doing exactly what daddy government is telling them to do. This is why we don't need anything like this. We need something completely different. And it just had me thinking that, let's see, how to put this. Tornado Cash as a protocol. Right. So in its ether, I know I'm not talking about Bitcoin right now, but I mean, I don't think that the developers of Tornado Cash should be going through what they're going through. But it's a good demonstration of what I mean here. Tornado Cash as a protocol, it may be quote unquote decentralized, right? But it's a known protocol. And the minute that you send to this protocol address, well, that's tracked online. So let's think about layer 2. What would happen, right, if you just ran, like, let's go back to the only cryptocurrency that matters, Bitcoin, and you've got something like Lightning Network, and you're just sending, sats to this particular protocol, but that may not work either. It's what I'm getting at is that, how do you send sats to something that looks completely innocuous and it goes through so many changes and reroutes and whatnot like that by the time it finally comes out the other side, there's no way to tell where the hell that thing came from. And in a very real way, Lightning Network already works that way. It's just that I would be sending to a Lightning address, i.e. a known protocol, right? So how do we manufacture doors in these systems that look like regular doors, that don't say LNBC1, that don't say whatever the address of a Tornado Cash protocol is? And I that way beyond my pay grade. But what I'm saying is that if we continuously fingerprint the identities of things in this system, rather than somehow mimicking possibly one of my favorite subjects, mycelium, in the ground, mushrooms, right? They have vast networks that go everywhere. And vast networks have the potential to be able to connect with each other and transfer data. What if the identity of the transaction was carried within itself, but is able to be sent to any of the protocols. And that somehow or another, the transaction itself is like a self-guided missile, knows where to go, but doesn't have any quote unquote finger. Like I could just send it as a Bitcoin transaction, but somehow or another, you see what I'm saying? What I'm suggesting at this point is mostly impossible given the way the structure is, because we constantly build. If you go into that door, you're in Bitcoin. If you go into that door, you're Lightning. If you go into that door, it's an eCash. If you go into see what I'm saying? How can we just have how can we make this more like a mall instead of individual stores that we want to walk into, and each individual store has different products? How about we can just go and walk into the main entrance of like South Plains Mall in Lubbock, and then we can self-guide ourselves to wherever the hell it is that we're going, to whatever store is inside that mall. I'm just putting that out there as an idea. And if anybody knows why that won't work, believe me, I want to know why. I want to know exactly how it is. And I'm not because I want to start an argument. I want to know how it is that I'm wrong, because if I'm wrong and it is just completely impossible what I suggest, then I definitely want to be the first one to know about it. All right, moving on. FTX, Alameda have been ordered by a judge to pay $12.7 billion back to creditors. CoinDesk is written by Shara Malwa. Defunct crypto exchange FTX and trading firm Alameda Research will pay $12.7 billion to creditors as a New York judge officially approved a consent order on Wednesday, ending a 20-month-long lawsuit from the Commodity Futures Trading Commission. Judge Peter Castle passed the approval on August the 7th, the filing shows. It did not seek a civil monetary penalty. Interesting. The order doesn't include civil penalties, but bans FTX and its sister concern Alameda, formerly a heavyweight crypto market maker, from trading digital assets and acting as intermediaries in the market. I guess that means that we're not going to have zombie Alameda and zombie FTX. Oh, well. FTX filed for bankruptcy. Yeah, we know. Okay, so we've already got the meat and potatoes of what just happened. So on a couple of days ago, August the 7th, while I was on the road in the first leg of coming back home, the judge basically ended this lawsuit. So this lawsuit is by the CFTC against FTX and Alameda is now officially over. And they will just pay $12.7 billion to creditors, and they will not pay any civil penalties. But they're banned forever from dealing with crypto. And there was already talk on the street by the guy that was handling, I can't remember his name right now, George something the third. He did Enron's bankruptcy. The bankruptcy guy for FTX had already brought to you like 3 or 4 stories about the fact that they might resurrect FTX and that it was coming back. So according to this judge, unless the ruling is appealed, this judge has said that will never happen. You can have FTX, but you're no longer allowed in any way, shape, or form to trade cryptocurrency. I think that that's actually a good deal, but it is what it is. All right, one more before we get to numbers. Medical data company OneMedNet is the latest to pursue a Bitcoin treasury strategy after a capital raise. CoinDesk, Helene Braun is writing it. OneMedNet late last month raised $4.6 million. Okay, million, not billion. $4.6 million in a private placement and used $1.8 million of the proceeds to purchase Bitcoin. Among the investors was Off the Chain Capital, a crypto investment fund with ties to Block chairman Matthew Rozak and Fortress founder Rob Kaufman, which purchased a combination of shares and warrants in ONMD. That's OneMedNet. OneMedNet has seen its stock price fall more than 90% since it became public via a SPAC deal late last year. Quote, it's an opportunity that if it works correctly, it can outperform Bitcoin's performance. Jesus Christ, these people just need to die. I'm sorry. But Brian Dixon, fuck you. Brian Dixon, CEO of Off the Chain Capital, told CoinDesk, from our goal as an investor, quote, this is a quote, we're looking for these discounts or value opportunities, and we work really hard to try to outperform Bitcoin. Well, that's a lofty goal there, I suppose. Dixon believes that it is crucial for public companies to reinvest some of their cash into Bitcoin rather than, real estate, stocks, or bonds in order to add the most shareholder value. Quote, I think more and more public companies are going to wake up to the fact that if you don't have Bitcoin on your balance sheet, you're not being intelligent as a fiduciary to that additional cash flow that you have in terms of where you allocate this part of your Treasury Reserve strategy. That is a clunky ass sentence, dude. In this, Off the Chain and OneMedNet is making similar arguments to that of Michael Saylor, whose MicroStrategy has seen its stock price outperform the return of Bitcoin since the company began adding the crypto to its balance sheet in August of 2020. U.S.-listed Semler Scientific and Japan's Metaplanet are among other publicly traded companies pursuing similar strategies. I just think that this might be turned into a little bit more of a fad, but only in the short term. Because the best play is to buy Bitcoin, hold it on your balance sheet, don't sell it. That I'm not arguing with that part. What I'm arguing with is that, like, this company, OneMedNet, goes public, loses 90% of its share price almost instantly. So what do? They buy Bitcoin because that'll help. I honestly, no. I don't think that helps you in the short term. And I think it helps you in the long term. I think what Michael Saylor did is actually the correct move. And I think that the people that are trying to emulate what he's done are doing the correct thing. But this seems very reactionary to me. And they're not the only one, right? So I think, I can't remember if it's, Metaplanet. I think Metaplanet is being reactionary. Now, I'm going to buffer that and say that the Semler Scientific guys, they may be onto something because they have a really good product, and they have had a really good product for quite a while. So for them, they already have positive cash flow. But when you lose 90% of your value the minute you start trading, that kind of tells me that there may be an issue with your underlying plan or your underlying revenue model or whatever it is that you're trying to make money off of. And that just by buying, we'll just buy some Bitcoin and that'll work. I don't know. I honestly don't think that saves everybody. I think you actually have to come in this with two things. One, a commitment to your service and product or product, and a proven revenue flow because of that commitment to your revenue or product. And second, then you buy Bitcoin. Or you buy Bitcoin along the way. Right. Well, while you're being successful with your original idea, you add Bitcoin to that. But if your idea sucks so hard that your share price crashes through the floor like a fucking duck in winter and you're just going to fix it by buying Bitcoin with this cash that you have, I don't know. I'd be very, very careful. Let's run the numbers. CNBC Futures and Commodities. West Texas Intermediate is actually up today since being hammered over the last couple of weeks. 0.74% to the upside brings us to 76.75 a barrel. Brent North Sea up over half a point to 79.61. Natural gas is up scant to $2.13 per thousand cubic feet. Excuse me. Gasoline is down a quarter of a point to $2.39 a gallon. Gold and copper are the only metal rocks doing well today. Gold is up a third of a point to 24.71. Copper is up just exactly 1 point, and everything else is in the red. Not terrible bad, but it's still in the red. Ag is fully mixed today. The biggest winner is chocolate, 10% to the upside, double digits swinging for the fences. Oh, bitch. Biggest loser is coffee, 3.07% to the downside. Live cattle is up 1.24%. Lean hogs are up scant, and feeder cattle are up 1.25%. The Dow and the rest of the legacy indices are down in the red today. Dow is down a fifth of a point. The S&P is down 0.09%. The NASDAQ is down a quarter, and the S&P Mini is down a half. on to Clark Moody's dashboard, where the price is $59,980. We're back down to a $1.18 trillion market cap. But somehow or another, we're able to still get 24.7 ounces of shiny metal rocks with our one Bitcoin, of which there are 19,737,439.87 of, and the average fees per block are very, very low, 0.07 BTC on average on a per block basis. And how many blocks are there? There's 127. Wow. And was it 263 unconfirmed transactions are stuck in those, and they're waiting for clearing at high priority rates at 7 Satoshis per VByte. Low priority is going to get you in at 5. What's hash rate looking like right now? 569.9 exahashes per second. So yes, while we did hit a major milestone, like 780 exahashes per second while I was up in the mountains in Colorado, we are now back down to something, resembling what we've seen for quite a while now, 569.9 exahashes per second, as I said. Now, on to The Torrent Begins, which was the last episode of Bitcoin and from the San Juan Mountains, which was recorded at about, I don't know, 7,300 feet, somewhere around there. Anyway, Arcerus BTC boosted 2,718 sats and says, boosting because I haven't in a while. Appreciate you. Yeah, I appreciate you too, dude. Dubrovko 2150 says, I kiss you, David. Not with that beard, you son of a bitch. God's death with 2100 says, thank you, sir. Great road shows. Well, I'm going to say something about that. I was definitely off. New place, completely new system. There's just no way around it. You're going to be off. I was off, and I appreciate you sticking with me. The road shows will be better. I promise. It's going to take some practice. It really is. Pies with 2100 says, thank you, sir. No, thank you. O2ZX with 750, general appreciation boost. Thank you. Tyler BTC with 500 says, cheers. Yegro with 2100 says, the economy is screwing everyone pretty hard. All of the shops in my neighborhood say the same thing. Quote, things have just been getting slower and slower, slowly. People be broke. Cyber Planet Hoddle with 200 says, nothing. Feral Hippie with 100 says, nothing. And I want to remind you all, and that's the end of the boost. I want to remind you all that value for value is the only way that this works. It really is. We have to migrate to the value for value model. I need your donations so that I can go out into the world and say, look, it's working. This works for me. I don't have any commercials. I don't want commercials. If I get the chance and it's like, makes the bills, I would probably do that. I don't want to. It's just that, there's rent, there's water, there's electricity, there's gasoline, there's all manner of stuff that I really would like this show to be able to take care of. And it can't do that without people donating to the show. And you can do that with a podcasting 2.0 enabled podcasting app, otherwise known as a modern podcasting app. That's right. If you don't want an old clunky ass Apple-based bullshit, podcast app, go and get a new podcast app. I think you can actually get those at newpodcastapps.com. Hold on, let's see. Newpodcastapp.com. Let's see if that works. Nope. Ooh. Deceptive site ahead. No. Oh, bullshit. It is not. Just go to Podcast Index. Let's see. We'll do that. Podcastindex.org. Okay, it's podcastindex.org. There's a tab up at the top right. It says apps. It's right on the right side of the search bar. And you can have filters. And you can just go, I just want the app. And then, so there's True Fans, there's Podverse, there's Podcast Guru, there's Fountain, which is my daily driver, there's PeerTube, Podfriend, LN Beats, Podcast Addicts, CurioCaster. What else is there? There's a couple of more. Breeze has its own podcast app inside the wallet. There's Sphinx Chat, which is sort of the same thing. It was its own thing, and then they added a podcast app to the wallet. There's AntennaPod, there's all manner of stuff, and all of these allow you to boost me, Satoshis, boost your favorite other podcasters, Satoshis. You can stream as Satoshis, but what you're really doing is making a statement that I don't want commercials. I want to listen to your show. I want to be informed, but we can't do this work without your support. So please donate, and donate kindly. I would appreciate it very much so. That's the end of the morning round. No. What did I use? Oh, the weather report. That's the end of the weather report. God, I'm out of practice. Welcome to part 2 of the news you can use. Remember Metaplanet? I was talking about them as being one of the companies that not doing so well, so they decide to buy Bitcoin and it's going to fix everything. Well, they've done it again. Metaplanet secures 1 billion yen, not dollar, 1 billion yen loan to buy yet more Bitcoin. Metaplanet, a publicly listed Japanese investment firm, has secured a $6.8 million US dollar loan to purchase additional Bitcoin. That's quite a bit, man. This comes just days after announcing plans to raise 10.08 billion yen through a stock rights offering, mostly for Bitcoin buys. They first revealed its Bitcoin treasury strategy back in May, aiming to hedge against the yen depreciation. The firm currently holds around 246 Bitcoin worth 14 million acquired over many buys. The 0.1% APR, or annual percentage rate, loan from shareholder MMXX Ventures has a 6-month term. Metaplanet plans to allocate the entire 1 billion yen to expand its Bitcoin reserves. At current prices, the 1 billion yen could purchase around 118 additional Bitcoin. This mimics MicroStrategy's playbook of raising debt to fund Bitcoin purchases since 2020. MicroStrategy's Bitcoin bet has increased its share price dramatically. CEO Simon Gurovich stated that the firm believes Bitcoin offers twin benefits as an asset that can appreciate and hedge against a weakening yen. By securing loans and issuing stock to accumulate Bitcoin, Metaplanet is essentially borrowing yen to stack sats. The company can pay back loans using future Bitcoin appreciation. That's a gamble, okay? We all know that it's going up and right for, forever, but there's going to be dips along the way, and they always seem to occur when you need it not to dip the most, right? So that goes for companies too. Anyway, the loan and planned stock offering highlight Metaplanet's commitment to aggressively growing its Bitcoin war chest. Yes, we know. But what's your underlying service? Say your Metaplanet says it's an investment firm. That's not what it used to be, but apparently that's what they're naming it now. And I just can't help but see a scrambling to success. And I don't mean that in a positive light. I literally mean that I think MicroStrategy and Similar Scientific are doing it the right way. I think Metaplanet and whatever that other one was, I can't even remember what the hell it was, OneMedCoin or OneMedNet. I don't think that they fully appreciate what it is that they're getting into. I don't know them. I've never met them. I've never interviewed them. But there's this gut feeling that I have that we have a 50% success rate going forward, at least right now, and that's MicroStrategy and Similar Scientific. And I'm not even sure exactly that Similar Scientific is going to, survive, but they do have a good product, and it's been around for a very long time, and it does seem to be very necessary in the medical world, so therefore their revenue model makes sense. So since the revenue model makes sense, then they're able to engage in the Michael Saylor playbook. For Michael Saylor himself and MicroStrategy, they actually have a product that they've had for a very long time. But as I've said on the show before, Michael Saylor himself said that in his view, that he thinks that they've kind of come to a limit, right? And maybe that limit is the advent of AI, because what he offers is business strategy software, like given your revenues and given your assets, what can you do with them? What kind of strategies can you form? And there's software that helps with that. And maybe he saw it on the horizon and said, after a while, they're going to be able to run through so many iterations with AI. And most of them will probably be wrong, but if you get a field of them and you've got, some human experts looking at what these things are coming up with, then you might be able to very quickly come up with a high quality strategy. Maybe he saw that, but I remember him distinctly saying that he thinks that MicroStrategy, as far as the company, the way it's structured right now, with its products and services right now, are sort of seeing the end of their road, sort of sunsetting. And he's just converting all of that into a complete Bitcoin strategy. That is different than what Similar Scientific is doing, because Similar Scientific doesn't have an end of the road or a sunsetting anytime soon, because their product is necessary for medicine. They have a good product. People buy the shit out of it. They have a continuous revenue stream. So that's even different between MicroStrategy and Similar Scientific. But Metaplanet and OneMedNet, I don't know. You flip a coin on that son of a bitch. Speaking of flipping a coin, OneCoin, Cryptoqueen, Ruja Ignatova's assets has been frozen by a UK court. Why did it take them so long? Interesting. Adrian Zmudziski, can't pronounce it, decrypt.co. London's High Court has issued a worldwide freeze order for the assets of alleged OneCoin fraudsters, including those of the infamous crypto queen Ruja Ignatova. According to the announcement shared with Decrypt, the case, initiated by over 400 victims of OneCoin, resulted in a freeze order on the assets of Ignatova and OneCoin co-founder Sebastian Greenwood, along with Christopher Hamilton and Robert McDonald. Hamilton and McDonald allegedly helped launder the funds on behalf of the OneCoin scheme's organizers. The funds of 4 influencers who promoted the scheme were also frozen, along with those of business entities that Ignatova allegedly used to launder the funds from OneCoin and purchase assets. Launched in 2014, OneCoin billed itself as a Bitcoin killer, but it was subsequently revealed to be a Ponzi scheme with absolutely no network for the token having ever been built. Ignatova, also known as the Crypto Queen, defrauded investors worldwide through a $4 billion Ponzi scheme until it collapsed in 2017, and then her subsequent disappearance. She was last seen fleeing Bulgaria on a plane to Athens, Greece in 2017, and made it onto the Federal Bureau of Investigation's 10 most wanted list. Congratulations, Ignatova. Although she herself has not been seen since she fled Bulgaria in the year of 2017, she seemingly resurfaced in a 2023 UK government filing linking to a London property. When the property was listed for $15.5 million, later reduced to $13.6, she was reportedly forced to step forward as its owner. This was due to a recent rule change involving overseas companies in the UK and her status as a so-called beneficial owner of the company owning the property. However, a BBC report at the time noted that the listing could be traced back to prosecutors of the German city of Bielefeld rather than UK law officials or Ignatova herself. Ignatova's page on the FBI's 10 most wanted list notes that the U.S. Department of State's Transnational Organized Crime Rewards Program offers up to $5 million for information leading to her arrest or conviction. Getting close to her would be rather challenging, though, since she is believed to travel with armed guards and or associates. The FBI also notes that she may have had plastic surgery or otherwise altered her appearance. Yeah, we know that. So my question, and this will be the question that I think a lot of people are asking, why is it just now? 2017 was a while ago. Was it, 7 years? It's taken the 7 years to, I would have figured that the minute that she hit at least the minute that she hit the FBI's 10 most wanted list, that they would freeze her assets then. And she made it to the 10 most wanted list years and years and years ago. Why now? And what has been allowed to occur on those assets? Has there been the ability to withdraw assets? Has there been the ability to buy other assets with those assets? What the hell? This doesn't make any sense, especially for the governments that we deal with that we know for a fact love to freeze people's shit when they don't like them. So why didn't they freeze hers? I don't know the answer to that question. But if you have a theory,
I'd love to hear it and read it on the air. So throw me a boostagram, support the show, and let's get into some tinfoil hattery. Last up today, Build Asset Management is going to donate 10% of its management fees to support open source Bitcoin development. Build Asset Management has committed to donating 10% of management fees from its Bitcoin-backed direct lending fund, Build Secured Income Fund 1, to bolster open source Bitcoin development. The donation is set to be a no strings attached and occur on a monthly basis. The fund is split equally between OpenSats and the Human Rights Foundation's Bitcoin Development Fund. Quote, Bitcoin is advancing financial freedom and economic empowerment for individuals from the bottom up across the globe and on open and level playing fields. We are committed to supporting its continued development for a brighter future, and these two organizations exhibit remarkable leadership and track records through their work in this area, said Matt Dines, CIO of Build Asset Management. Quote, every profitable Bitcoin business should support the open source contributors that make this movement possible. We are incredibly grateful for Build Asset Management choosing to lead by example with a long-term commitment to the OpenSats General Fund, added Matt Odell, co-founder of OpenSats itself. Okay, so Build Asset Management isn't funneling profits, whether gross profits or net profits, from their investment product or their management product. They're donating 10% of management fees. So if they're taking, like, I don't know, let's say they take 1% as a management fee, then they're going to donate 0.001% or 0.01% of that to OpenSats and the Human Rights Foundation's Bitcoin Development Fund. So it's interesting that they're going to do the management fees rather than another model. Honestly, I kind of like it because the management fee itself seems to be the only way. Now, I don't know anything. I don't know very much about, Build Asset Management, but I will probably be right in assuming that their only revenue is the management fee revenue from the product that they've built and are trying to sell or service, however you want to look at it. And that the management fee itself is the only revenue. So now my question becomes, is it net management fees? Like after everybody's been paid, the electricity has been paid, and you're left with nothing but pure profit. Is it 10% of that? Or is it 10% of gross before everybody's paid? Because that's a very, very, very different number. But I'm just glad that they're going to donate 10% of their management fees, whether net or gross, to support open source Bitcoin development. Because if their revenue model depends on the security of the underlying asset, and that asset was also built by Bitcoin development, then they need to fund Bitcoin development. The companies are in the best position to be able to do that. If they don't, then what are they doing? If you really get down to it, if you depend on your car, do you run it on 4 flat tires all the time? No, you don't. If you depend on your fish, let's say you got a fishing boat and your job is to go out there and catch fish and bring it to market and sell it to people because they like to eat fish. Would you fish with holes in your nets and never repair them? Does that sound like a very smart thing to do? No. And one more. If you're flying a plane for a living and you're flying passengers, do you consistently fly on a broken engine? Probably not. You probably can't even get off the ground, which is actually good news, because then you won't be in the air and have gravity, decide to not be your best friend anymore. Right? So this is the same thing. All of these funds, BlackRock and BlackRock's IBIT and all these other people, these 11 spot Bitcoin ETFs, only 2 of them, as far as I know, are donating to OpenSats and Human Rights Foundation and one other one, and I can't remember what it was, but they're all trying to support the open source Bitcoin development infrastructure, right? The people, the institutions that have set these things up, they're really trying to support it because their products absolutely depend on the smooth functioning of the underlying asset and the security of that underlying asset. And the asset is the security, and the security is the asset. And if you don't know that about Bitcoin, then you need to read some more, because those two things go together. It's not just two people holding hands. It's like two sides of the same ball. And if one side of the ball, falls off, you ain't got a ball. What you've got is some oblong looking thing that doesn't really do much except wobble around. So therefore, without that other side, without the token of value and the security of that token being squished together all in one package, and having both those sides developed upon concurrently, then you don't have a ball that you can go play with. So if you want to, keep your ball and keep playing on the court, you're going to need to support open source development in the Bitcoin infrastructure and ecosystem, as well as Lightning Network and Nostr and eCash, and God only knows what else is on the horizon. Right now, I see 4: Bitcoin, Lightning Network, Nostr, and eCash. Now you'll say, why Nostr? It's not money. Why would you say that it's not money? I'm not saying that it's a token. I'm not saying that that an event, when I say good morning to somebody, I'm not saying that has, an inherent value in and of itself, but it's a rail of money. So if I look at Lightning Network, that is a Bitcoin rail. If I look at eCash, that is also a Bitcoin as well as a Lightning Network rail. Those are communication protocols. They have a token involved. Nostr is just a bit different. It is a rail that has events involved. Pablo has figured out a way, and Pablo is a developer on Nostr. He's been around for a while. He doesn't sleep very much because he's always delivering, he's always shipping. He's figured out a way to turn a node into an eCash wallet. What I have is two sides of a ball. I have a token of value that has security, and then I have communication rails along with that. All 4 of these networks are going to are now talking to each other, and they're going to figure out ways to communicate even better, translate between each other even better, like 4 different kinds of mushrooms growing in a forest that are all connected to the trees and bushes and grasses and whatnot, and they're all sharing nutrients, but then they start, the 4 networks start to talk to each other. Now, the network that is attached to like 100,000 cypress trees is now able to share in the resources of 100,000 pine trees. And that would be the Nostr network. And then there's the Lightning Network, which can share in half of both of those networks and just be a routing type of thing for the other 2 networks. And then you've got other networks that can come along and start to attach to all these networks until you end up with a mall that has the same door. If you remember what I was talking about before, this is what I mean. Walking into a mall, it doesn't matter what entrance you use. You're just going to the mall. Inside that mall are separate networks. But once you're inside the mall, you can deploy an instruction set as to where you need to go away from the prying eyes of people outside the mall. All they saw was that you just went into the mall. What you do in the mall should be your business as directed by an instruction set that you have in your transaction. If I'm not being clear, it's probably because this is an idea that has just been forming for me today. But I've been trying to figure this out. Like if I go into a mall, what I'm walking into is an ecosystem. And once I'm in the mall, I can go to Dillard's to go pick up a suit. That is a network like the Bitcoin network. Or I might be able to go over to Kohl's and get something cheaper. Well, let me walk over there. Well, that's its own mycelial mushroom network, and it's its own thing. But what if somehow or another I can walk into Dillard's but still buy Kohl's, or walk into Kohl's and still buy Dillard's? The first thing on your head is that both those companies will go out of business. I get that. The analogy is a little rough. I'll work on it, I promise. But what about Spencer's, if they're still open? Or what about, a jewelry store? These are all their own separate networks. The mall itself combines them, or at least it allows an ecosystem for them to start interacting. Whether or not they interact with each other is up to those particular networks' sensibilities. But they could, because they've been provided a space. So instead of sending our cash to Tornado Cash to quote-unquote mix it so that we can obfuscate where it comes from, what if we had this idea where everything was the mixer? And that if the government was using Bitcoin, it's using a mixer. Only not because we changed the protocol, but because we changed the environment of the ecosystem where all these things already exist as they are without change. That's what I'm suggesting. All right, that's going to be it for today. I hope you enjoyed the show. We are at 60 minutes and 46 seconds, so I'm just going to say it. I'll see you on the other side. This has been Bitcoin and I'm your host, David Bennett. I hope you enjoyed today's episode and hope to see you again real soon. Have a great day.